Hey everyone! Since the Federal Reserve held their last press conference on September 21, the stock market has taken a nosedive. As I watched the numbers come in, one thought crossed my mind. I'm glad my investment portfolio is weighted towards real estate. I think it gives everyone a little heartburn to see the S&P 500 fall by more than 6% in a little over a week. But the stock market has been on this trend for a while. It's down by 10% in the last month, and it's down by 24% from the market peak at the beginning of this year. On the flip side, the stock market was up a lot last year. It gained 27% in 2021, but the losses this year have basically wiped out all of those gains from last year. The commercial real estate market also had big gains last year, but they weren't 28%. Industrial properties had the biggest average price increase last year, totaling 17.9%. Self-storage came in next at 13.6%, then apartments at 8.1%, followed by office, hotels, and retail. The big difference, though, is that while the stock market peaked at the end of 2021, commercial real estate kept going. In fact, its growth accelerated. In the first half of 2022, just the first 6 months, the average industrial price went up by 13%. Self-storage went up by 15.5%. Hotels jumped by 13.7%, and apartments climbed 10.3%. Retail and office trailed with 3.8% gains in the first 6 months of 2022. Think about that for a minute. In the first 6 months of 2022, the stock market fell 20%, while office property prices went up by 3.8%. A key factor here, though, is that it takes about 90 days for a transaction to close after it's put under contract. So the closed deal price for the second quarter was probably put under contract before the Fed started raising rates. I think the Fed press conference on September 21 will impact the commercial real estate market and pricing, but the impact will be far less severe than what we're seeing on Wall Street. In general, commercial real estate values tend to move more slowly than the stock market, and they also tend to be less dramatic. Over the last 20 years, the quarter-over-quarter change in the value of the S&P 500 was 6.6%. Comparatively, commercial real estate prices average a quarterly change of just 1.8%. So the S&P quarter-over-quarter swings have been enormous, especially in times of economic volatility. Commercial real estate, by comparison, is very sedate. It still has its ups and downs, but the amplitude tends to be very modest compared to the stock market. Another consideration is the total returns over the long run. Since 2000, commercial real estate has delivered a compound annual growth rate of 7.8%, beating the S&P, which had a 5.3% CAGR. If you invested $1 million in commercial real estate in 2000, today, on average, it would be about $5.6 million. That includes appreciation plus cash flow through the years. That same $1 million invested into the S&P 500 delivered $3.2 million in gains, including dividends. As I've mentioned in past videos, investing in real estate has a lot of advantages. The cash flows and property values tend to be more inflation resistant. Real estate can be passive, like a triple net property, or they can be a hands-on, roll-up-the-sleeves value-add investment. It can have long-term leases, some run 15 years, or a single night lease at a hotel. And real estate offers a variety of tax advantages as well as a wide range of leverage and financing options. But the big advantage highlighted this year is the sector's much lower volatility. The financial news of the last couple weeks has really driven home the importance of having durable, stable investments, especially when you're thinking long-term. And real estate is all about thinking long-term and keeping your eyes on the horizon.